Good afternoon, everybody, and happy Friday. Welcome to the Real Life Real Estate Investing Show, where we try to help you get your real estate wealth on. My name is Hector Hernandez. I'm a real estate fund manager, also a real estate and wealth building coach here on reallifetrading.com. Joining me today, as always, my buddy, my pal, my business partner, my right-hand man, 2022's best looking real estate investor of the year, Luis Alejandro Lopez. What you got, Luis?
I'm not sure, man, because by 2023, with that haircut, it's gonna be you.
Hey, dude, you got it last year. Can a brother get a shot at it?
Hey.
That's
so
why I grew the hair out.
My name is Luis Alejandro Lopez. I'm one of the real estate coaches here in Real Life Trading, and we got an amazing show for you. All right, we've been talking to you about what happens if we buy homes, we flip them, we rent them, we do short-term rentals. But what about you want to invest in real estate and do nothing? All right, so this is what we're here for today. Let's talk big. Let's talk about multifamilies. What happens with multifamilies? What do you need to know? What you need to look for? And Rhea is gonna basically just walk us through the whole thing. All right, but meanwhile,
time out. Did you say I could invest in real estate and not do anything at all? Like just sleep all day?
Like hands on your butt? Yeah.
What?
There you go. Hands under the butt, and that's it. All right. So, but before we do anything else, guys, disclaimer. Again, we're two guys on the internet. We've done a whole bunch of stuff. If we have not done it, we bring people that have done it. But again, that's their experience. Read, learn, listen to podcasts, call people, ask questions. Please, please, please don't sign a paper without knowing what you're signing. Please don't send that wire if you don't know what you're doing. Please don't push the button if you're not sure. So call people, call me, call Hector, call any friend, any relative, anybody that can, we've been preaching this for, 2 years now, pretty much? We're two guys on the internet. We think we know what we're doing. We hope that you know what you're doing. And this is just for education and entertainment. If you have any questions, again, here, we have our QR codes. If you have your QR code, you can send a Morse message or Telegram to Hector. You can go into my Instagram. You can do all kinds of things. You can reach out if you have any deals that you want us to look at. If you want any deals that you need money to, for invest. If you have something that comes up just through in front of you and you're not sure, reach out to us. With that QR codes, you can get to us at any time. Okay. And
that's correct. And same scenario if you are also looking to deploy capital, like Luis just said, in a passive manner and not do anything at all, just literally sit on your hands. Use the QR code, reach out to us, and please don't kick us out for the new meme on the slide. I get it. We love you guys. We all trade, but it is a funny meme. I saw it. We had to take a shot. I fully expect a text message from Jeremy in a little bit.
That's okay. That's okay. Always fun and games until somebody's bleeding. Now, Rhea, how are you today?
I am good, thank you. How are
you been? So Rhea, it's we know him. We met with her a few times. Friend of ours. She does multifamily real estate. She has a complete different background, and all of a sudden she said, "You know what? I'm done with this." And she decided to let's see what this whole thing about real estate everybody's talking about. It's been what, 3 years now, 4 years now?
It's actually been 6 years.
6 years, because you moved from one coast to the other. You basically got rid of everything and let me start this new life, and here we go.
I started doing the real estate in California. I just moved to Florida 2 years ago. So now I do this full time, got rid of the W-2 and do real estate full time now. So
from a much better state. That's smart. I love it. Well, yes, like Luis said, we've known Rhea a few years now, and I've known her to be, just an all-around amazing person. She's very dedicated to her craft, and we brought her in here today not only to share a little bit about herself, but also to share a deal with you guys that she has going on. That I think it's a good deal. I'm actually helping her out on that deal, and it is and it's a way for not only to teach you guys, but to share an opportunity that's on the table with you guys. And, some of the things that I really admire about Rhea, like I said, is her dedication. But I've also seen her when a deal starts to struggle. And I've seen how she just goes to work. You know, there's a lot of people out there that will just sit there, whine and cry. And I've actually seen her pick up, jump on a plane, fly over, and take over management duties when the property manager dropped the ball. Fumble, she steps up to the plate, she handles it. And really, that's what you want in a partner. That's what you want in someone you invest in and with. And that's really the way it should always be, right? We should not just, with anything in life, we should always take action. We should try to fix it. So I really do admire that she's an action taker. Rhea, why don't you share a little bit about yourself with the team first and foremost, and then we'll go from there.
Sure. So, hi everybody, I'm Rhea Tobin. I have actually, well, I mentioned that I've been doing real estate now for 6 years. I started initially purchasing some land, and then I converted over to doing multifamily properties back in 2017. Spent my first year just getting trained because it was important to me to be able to know what I was doing, didn't want to be getting into deals and not being able to talk to people and understand what was going on. But prior to that, I actually have 20 years of business experience. I spent 20 years working for the defense industry, as started out in contracts and then moved into program management. So I'm really good at Excel spreadsheets. I'm really good at managing programs and timelines and budgets, because that's what I did for 20 years. So I really just took that knowledge and then now apply that when I'm managing a deal, whether it's finding the deal and analyzing the numbers, or even after you close and you're making sure that we're meeting the budget and the expenses so that the deal pays what we tell people that it's going to pay. Because if you don't have control of your budgets and your schedules, you're going to find out really quickly that you don't have money to pay your investors, which is not a good thing and not what we want to ever have happening. So I've taken, like I said, my skills as a program manager now, and I apply that in managing our deals after we close.
I love it. Justin says that he was squinting to find a QR code or a longer list. I take it that's because my QR code has a gazillion things in it. I love it. Natasha asked that she found a buyer for her warehouse and she didn't need an agent. What does she need to do to finalize the sale without an agent? Natasha, whenever you are doing a transaction direct to seller or direct to buyer, I highly recommend that you involve a title attorney. They can now take over. You don't have to pay a commission. You're going to need a title agent anyways, but by using a title attorney, they'll be able to help you with the contract and making sure that there's someone on your side to dot the I's and cross the T's. And if you are driving that process, it's much better than your counterparty.
Yeah, or
Please
just find yourself a good attorney that can recommend you a title company. Title company, it's they usually have attorneys on at hand for them to review documents or anything. But if anything will go sideways, the title company is supposed to be impartial. So you should have yourself an attorney. They can recommend you one, but you should have somebody. I mean, you shouldn't charge much, maybe $1,000 or something for a transaction. If no problem.
Depends where you're at. Depends what state
exactly.
the transaction is.
Exactly, but it's usually very low price just for review a transaction. But it's something is a good person to have in your corner in case something goes sideways. Okay,
and it's definitely less than paying an agent.
Issues, signing, loans don't go through, timelines don't go through, then it's better to be represented in any way. Okay.
Yeah, and it's definitely less expensive than hiring than paying the broker commission. So whatever money you're saving on the commission, you could splurge a little bit on the attorney and they'll watch your back. Right, Rhea, would you agree with that?
Absolutely. You always want to make sure somebody's making sure your interests are covered.
Mm-hmm. And remember, by the definition, the title company is supposed to be impartial. They are there to execute the contract to how it's written. So now if somebody drops the ball, then it's a different story. Again, they're there to execute the contract. So what happens if the contract doesn't go through, then it's out of their hands, pretty much. Okay, until somebody tells them what to do.
So I think today's show, like we said, Rhea's going to be presenting what's called a syndication deal. You guys have all seen Lewis and I talk about syndications, talk about funds. Mm-hmm. But Rhea, if you want to kind of just, spend a couple minutes explaining, a syndication, what a group investment is, just for the sake of the audience, that, we try to educate here as much as we possibly can. And you should also have access to controlling the screen whenever you're ready to pop your presentation on.
Okay, so first I will just kind of talk about the high level. So when Lewis talks about investing in properties and not having to do anything, that's what a syndication basically is. So from our perspective, we find instead of doing individual houses or individual condos, which is certainly a way that everybody and a lot of people invest in real estate. So I invested in multifamily properties. And so I go out and find properties that are 50, 100, 200 units, and then put a deal together where we acquire the property, and then we bring in investors who then invest in that property, and that's where it comes in. You come in with an amount of money, and then you just sit back and other people manage it, and you get your dividend checks. And then it depends on the size of the deal, whether your dividend checks come on a monthly basis or a quarterly basis. But ultimately, that's really what you're looking for, is it's passive income to you. So you can focus on whether it's your other own business or your job or even just your family you want to be focusing on. And this is just money that comes in because you invested in a deal. There is, you always want to be making sure that you understand the deal before you get into it. And so when I present my deal today, any questions, you definitely want to make sure that get answers to those questions, because like any other deal, there's always some risk involved. But what I do and my side of it is, and again, like I go back, I do Excel spreadsheets really well, and I know numbers inside and out. And so I make sure when I'm putting these numbers together to put in an offer on a deal, I know the numbers inside and out, and I am able to give you a level of comfort that, the numbers that we're projecting are the numbers that are good for us to be, moving forward with and tracking on the future of the property. So that's kind of it. And that's how you're able to invest and not have to do any work, which is nice.
Used to be called mailbox money, but who gets checks anymore?
Exactly. I don't know.
ACH money.
Now it's just fake internet money, it just flows through the internet.
Yes, it does, which is a good thing. All right, so if you give me just a second, I can upload my presentation. Here we go.
All right. And team, please feel free, as always, to throw your questions in the chat. We will field them as we go along.
And we spoke about syndications before a few times, but if somebody here has any questions and wants to know some kind of detail of how they work, absolutely. I mean, that's why we're here. We can explain whatever you guys need before the presentation starts.
So hi, everybody. This is Hillwood Manor. Just want to kind of give you the presentation. Hillwood Manor is in Union City, Tennessee. This is a 64-unit property. And the first thing I saw about this property is just what a nice property it is, between the stone on the bottom and then the nice white siding. But overall, this property is a very nice property. It's been well maintained. It's only had 2 owners. So the first owner owned it for about 15, 20 years. And then this owner that we're purchasing it from now owned the property for 3 years. So we are coming in now as the 3rd owner of this property. Okay, so this is going to be the team coming forward. So John Saunders is one of the partners in this deal. He's actually the one that found this deal. And he lives in Birmingham, Alabama. John's background, he's actually been an entrepreneur for his whole adult life. He owns a company that now is one of the largest landscape architect companies in Birmingham, Alabama. John, just a couple of years ago, decided that he wanted not to get out of the landscaping business, but to be able to supplement, his income and also bring, add value to his family in the long run by investing in real estate. So he took some training classes. And then this deal came across his plate, and he was referred to me by somebody that both Hector and I know, who is a lender, and we attend her Zoom calls every couple of months. But when John found the deal, he was looking for a sponsor, and so that's my role on this deal. But John, like I said, John's background is 20 years as an entrepreneur. And then there's me. So we've kind of already given you the highlights about me, 20 years in the defense industry, and then now I've been doing multifamily investing for the past 6 years. I'm an Army brat, so I've grown up all over the country. I currently live in Florida, not too terribly far from where Hector is, about an hour and a half away. So Southern Florida, where I am getting used to the heat. It's been a challenge the last 2 years, but we're getting there. So, but no, Lewis, I'm not planning to move anywhere where it gets cold ever again. I grew up in the Northeast for a lot of years, and if I never see snow again, except in the distance, that's perfectly okay with me.
Pictures
I
and
get
TV,
you.
right? So that way we can see the bottom of that. Because there was one point that I did want to make that, as you guys can see, this says this is a 506 offering on the bottom of it, which what that means is that it is available to accredited investors only. I'll take a second there to kind of remind you guys, this is stuff that Lewis and I have spoken before, but a 506c syndication means that it is available to accredited investors only. Accredited investors are those who make over $200,000 a year on for a single individual, or $300,000 for a couple, or they have a net worth of over $1 million without counting their primary home. Now, there's some stuff that might change with that definition, but as of right now, that is the definition. And these are the people who currently are able to invest in this deal alongside Rhea.
Thanks for clarifying that. I did forget, so I apologize on that one.
No.
All right, so this is not just scrolling up one page at a time, so I'll kind of manipulate it as best I can. So I kind of introduced you to both John and myself. So then we also have Luis Castillo, who is helping us in this deal as well. And Luis and Hector have also known each other. So this is a very small world we've got going on here. So Luis knows Hector. He also knows one of our other partners, Shanika, who introduced me to Luis. So that's kind of how we all got together when we found this deal. So it's been and it's all been referral based. So people that have worked with each other in the past. So Luis does live down in the Miami area. And he started out his career as a broker and then as a mortgage broker, and then has since transitioned into doing multifamily as well. And he is part of our team. This artist structure is my friend and business partner, Shanika. We are actually partnered in another deal together. And her husband, Jeff Miller, live in they live in Atlanta. I'm like, I know it starts with an A. They live up in the Atlanta area. And Shanika,
I mean, Shanika a couple of times since I moved here.
Oh, okay.
Mhm.
So Shanika is actually currently working for the Department of Homeland Security and has for the past 20 plus years. So she's a deputy division director. In all honesty, don't even ask me. I know she has to do with immigrations and customs, but that's as far as I'm going to go. So, but she is a deputy director, so she manages programs, she manages people. So she's very, well understanding of how to deal with. And like I said, she is now working on another deal that I am one of the general partners on as well. So that's how we've gotten to know each other. Her husband, Jeff, has also been working for over 25 years in the IT industry within the school system in the greater Atlanta area. So the two of them have just in the past, I want to say 4 years, they do own other single family homes, but they just in the past 2-3 years have gotten into multifamily. And that's when I met them. And then we got Hector. So Hector, I don't know if you want to just introduce yourself. Everybody on this call knows you. So
yeah, you guys all pretty much know me. I've been in real estate for a long time. I'm in love with real estate. It is my absolute first love. As you guys know, I got a long track record, been doing a lot of stuff in real estate, so I won't bore you with my bio, but I did want to circle back a little bit to yours, Rhea, because you skipped over a very, very important track record that you have, right? And like I said, Rhea's been at this game for a few years, and she has definitely participated in several deals. So I would love for you to share some of that with the team.
Absolutely. See, I'm so used to not even like talking about myself. My least favorite thing. Just kidding. So everybody, yeah, like I had mentioned, I did start doing multifamily investing in 2017. I currently own 5 assets, and this one is my 6th one. So basically, in that 5 assets, it's $20 million worth of assets under management. And those include properties. We've got 2 properties in the Kentucky area, which are not too terribly far from this property. One of them, the Brandy Chase, which was my first acquisition, and I still own it, is only about 2 hours away from Hillwood Manor. So I know that I'm very familiar with the area. I know it well. I know what's going on business-wise. I know what's going on population-wise. But then above and beyond that, I also invested in 2 deals that are north of Houston. And then I have another deal that's in Lubbock, Texas. And then the other deal that's also in Louisville. So those are the 5 deals that I currently have. It's just under 300 units. And like I said, $20 million of assets under management. And on each and every one of these deals, I have a role. Not only, I'm not just an investor, I'm on the GP team. So I either help out with asset management, or I help with newsletters to communicate to the investors what's going on. Pretty much any area that, I'm needed to be supporting. So I immerse myself completely in these deals so that I know what's going on and can be able to do that going forward in other deals as well.
Awesome. Thank you for sharing that. Your current assets under management. All right, let's roll. Let's get to it.
Oh, all right. So I'm going to go. So just kind of like Hector and Lewis had on their slide, this is a disclaimer. Obviously, this is real estate. I am not an attorney. I am also not a CPA. So I always talk, when I'm talking to people who want to invest in deals, I always say, you know, I will be happy to answer any questions that you have about the deal. But especially when it comes to reading the contracts, you want to make sure that you understand everything that's being said. And so I highly recommend that anybody just kind of talk with the CPA and or an attorney in making sure that they understand what the investment is and what the returns mean. And so if you're interested in this deal, we'll get you the package. You can read this all in detail. But until then, I'm just wanted to let you know that's where we are. So, and this is also the financial disclaimer, which just ultimately, just like Lewis and Hector said about their other deals, there is always risk in every investment that you do, whether you're in the stock market, real estate, doesn't matter. So you just always want to make sure that you understand what you're getting into, and then so that you can make a sound decision in investing in the deal. So this is the aerial views of Hillwood Manor. Hillwood Manor, like I mentioned before, is a 64-unit property in Union City, Tennessee. So it's just across the border from Kentucky. It's kind of up in the corner. If you look at a map, it's got Kentucky just north of it. It's got St. Louis kind of to the northwest of it. And I believe Alabama, and now I'm going to get my geography, God only knows, is not that far away. And I only know that because John drives there in 2 hours. So he is very close to the property, relatively speaking. So we do kind of have a boots on the ground person. If there, should anything arise, there's somebody that can get there within a very short period. And I'm really only a plane ride away. And as Hector's mentioned in the past, if I've had a property that has a problem, I'm on a plane and getting there pretty darn quickly, because it's important to me that our investments always get managed to the best of their ability. As you can see, kind of from this picture, the lot is over 5 acres. So there's lots, and you can see in that back end side, there's a whole lot of extra land there too. But it's a nice little property. And then you can see the town kind of just in the background. And then over here, we've got swimming pool. We're going to talk about that. This area right here is both an office, and what we're looking to do to this area is convert it into a clubhouse area for our residents. And then these other buildings here are where the apartment units are. The property is minutes away from the Walmart Supercenter. It's got Titan tires. Wow, that one's a tough one to say. Titan tires. And it's also Tyson Chicken is also very close by. So there's lots of employment opportunities besides these as well. But these are just kind of some of 3 of the bigger employers right in the local market. Here's just some more exterior pictures. Like I said, you can see the stone on the bottom, and then it's very well kept and cleaned. Siding on the top. The parking lot down here was actually just recently redone, sealed, and painted and striped. So this actually looks like a little bit faded. So I have a feeling this picture was taken before that work was done. The roofs on the property, 2 of the roofs are brand new. One of the roofs is only, I believe, 5 years old, and the other 2 may or may not need to be replaced during the time that we own it. But we do have budget in our CapEx budget. If it comes that those need to be replaced while we own the property, we've got the money in it to do that. So when we talk about numbers, that's part of our business plan, is we're factoring in the likelihood of needing to replace those roofs. These are just some of the pictures of the property. So as you can see, there is a laundry room facility for the residents to use. And we've got, just general pictures as far as kitchens, bathrooms, and living rooms. So you can kind of just see what it takes. Our goal in this property is we've got 45 units that we're planning to do what John calls a heavy lift, which is a major renovation to the property. And we're going to see some pictures further on that just show what that's like. But it's taking an older unit these have not been upgraded in, I believe it's 15 or 20 years now. So we're going to be bringing in some of the new flooring that you can see in these pictures. You got the wood flooring on the second floor. We're going to be putting in new carpeting. And on the first floor units, you're going to get the vinyl plank flooring. We're going to be upgrading the kitchens and the bathrooms. So it's going to be basically a gut out and fresh new unit. And for that, we're able to get at least 185, but we're looking at over $200 in monthly increase in rent. Then we're looking at 19 of the units, depending on, how residents, when they leave, that will be a lighter turn. So they won't get quite as heavy a turn, but they're still going to be really nice. This is kind of what an old unit looks like. So this is when you go in, you can see that how, kind of worn out the carpeting is. The cabinets are really dark brown. So that's very much, I think an 80s color for apartments. You've got the, white, white appliances, all of that good stuff. It's not a bad property by any stretch of the means, but now we can start to take a look at what they're going to look like when it's fully renovated. Like I said, you got the plank flooring, which is really nice. We're going to be replacing out cabinetry. Second floor will get new carpeting, but the first floor will have vinyl plank throughout the unit. And the reason for the second floor carpeting is because anybody who's ever lived in an apartment, you don't want to hear what your neighbors are doing upstairs, really. And so vinyl plank flooring, unfortunately, if the neighbor's having an argument or got a child stomping, having a temper tantrum, whatever's going on, you don't really want to be hearing that as much as possible. So we're going to keep the carpeting in the second floor and then vinyl plank in the first floor.
Playing basketball on the second floor, just do.
Exactly. Yeah, now you know Hector has kids, so. So I've talked about this a little bit, but why we like this deal. As I mentioned previously, we're looking at doing heavy lifts on, a majority of the units, and the current owner did one of those, which you can see in those pictures above, and they were able to get $185. They had been renting that unit for $725. Now they're able to rent it for $900. And the positive, or even above that, the positive thing is they rented that unit in very short order. So they've got a waiting list for units. And they also, when the tenants saw what they were doing with that unit, they've also already expressed interest in getting a unit upgraded as well. And nobody is really saying anything about the fact that the price went up $185 a month. So we're very confident that we can get to that 200, maybe even 225, certainly within the first couple of years. So that's basically a 30% rental upside after all of these renovations are done. Who doesn't want to have basically a 30% increase in revenues in any business that you're in? I don't know a business person out there that would say, no, please don't give me a 30% increase in revenues. So the property management company has been there. They actually have been there for about 10 years. So with the current owner, and then they were there with the previous owner for a while too. They've done an excellent job managing this property. It's over 95% occupied. They were very involved in John's plan for what he wanted to do with the units, and actually kind of walked him through the contractor that they hired to do that one heavy lift. So they're very on board with that, and they can't wait for us to be able to execute this plan. As we kind of mentioned, the capital improvements, we're going to kind of go through that a little bit more in a further slide, but there is, as I mentioned, there is a waiting list for apartments. The school system is very close by, walking distance. So at least, there is an elementary school, so maybe they're not necessarily going to walk to school because, little kids, you don't want them out on the streets, but there's, the elementary and the high school are also not very far away. So walking distance for everybody to get to school. This property is also very close to the NAFTA highway, which is under construction and will be done in 2024. And the NAFTA highway is basically, it's Interstate 69. It's being built or constructed and renovated all the way from the Canadian border, all the way down to the Gulf of Mexico and into Mexico for transportation of supplies from both Canada through the United States and into Mexico. And one of the things that is coming because of this highway, there's a lot of companies coming to this area. I know from my property in Southern Kentucky, we're getting an awful lot of, businesses that are either coming back from Mexico after, the last handful of years when they went over, when they went over across to Mexico. Now they're coming back into the United States. And then there's also a lot of green companies, in my property in Kentucky, we've got Ford is opening a really large plant to manufacture electric batteries for their new cars. So these are the types of companies that are coming to the area. It's partly because they can find land to build plants, but they can also hire people that are, at a price that they, can manufacture their plant, products in a cost efficient manner. And the cost of living in these areas is a lot better than, say, the Northeast or the Northwest for that matter too. So there's a lot of opportunity. Union City does have an exit right off of the highway. So we fully expect that that's going to be a beneficiary. And the state of Tennessee, I don't know if anybody of you know, because like Florida, Hector and I know, there's no state taxes. They have definitely been the beneficiary of a lot of businesses that are leaving California and New York and Washington State. They're all coming to states like Florida and Tennessee because they don't have income tax. So, we fully expect that that's going to be an avenue where there's going to be some real growth potential for Hillwood Manor. So just to the surrounding areas of not too terribly far, as you can see, we got Hillwood Manor right there. He's got an arrow for where it is. You've got Discovery Park of America, which is a museum. Downtown Union City is right down over here. And in the pictures, you could see that just in the distance. It wasn't very far at all. The Union City schools are close by. There's a Baptist Memorial Hospital, the Walmart that I had mentioned. There's also a National Guard Armory. And then as I mentioned, the highway is really only not even 6 miles away. So very close by. So close enough that people can get to quickly and get to and from, work if they work outside of the city, but also not right on top of it. So you don't have the highway noise in the background. So it's far enough away for that. Just some information about the limited liability company. This is being structured under Hillwood Manor LLC. We like to name our LLCs right after the property that we're buying. That makes it nice and easy to remember what you're talking about. And then John Saunders is the primary person that found the deal. I am his sponsor and signing on the dotted line. So we are going to both be guarantors on the loan. We are getting our loan through a company called Lumint. It is a Fannie Mae fixed rate interest rate loan. So no adjustable rates, nothing scary like that. This is a fixed rate loan. We have our bank account with Chase Bank. That's where I have all of my properties are with Chase. I've got, they like me, so I got good business with them. So, part of this deal, there is going to be an operating agreement and a private placement memorandum that if you're interested in this deal, you'll get the link to, and you can read through all of that information. And then anybody, happy to answer any questions that you have. We are working with an SEC attorney. His name is Kyle Swafford, and he works, obviously, Swafford Law Firm. Let me see who owns that one. Just kidding. Kyle's a good guy. He's been doing SEC attorney for over 10 years now. So our target closing date is around early to mid-October. We have technically the date is early October, but we've got a 30-day extension available to us. And that's just, we're waiting for the loan, basically all of that paperwork to come through, and it's giving us the time to raise the capital as well. We want to get the capital in obviously a week before we close. So that way, once we close the raise, and then we can then turn around and wire that money over to the lender. And that makes everything seamless. And then that's when we start working toward closing the deal.
That's when the real fun begins, right?
Exactly. That's when the real fun begins. So just to kind of give you some highlights about the loan itself. First, the original asking price for this property was $4.75 million. So John, in his expertise and his training, was able to get them down to $4 million. So we already have a $750,000 savings. The loan balance is going to be $2.9 million. We've got an equity raise of $2.2 million, and that includes not only our down payment, but it also includes our business plan for upgrading the units. And our hold time is 5 years for this property. And then we'll just kind of go here. This is based on, so you can kind of take a look at the information based on a $100,000 investment. When you get this, you can really dig into those numbers, but ultimately down there in the right-hand corner, all those lovely little green cells, that means the numbers were working out in a way that's optimal to the investment. So your average annual returns are going to be 19.9%. which ultimately what that means to you is at sale, you're basically going to be able to double your money. So if you come in with $100,000, you're not only going to get your $100,000 back, but you're going to earn another $100,000. So how is that for a 5-year worth of investment? The internal rate of return, which is that IRR, that's 16.43%. And the average cash on cash is 7.21. So that kind of goes back to the investment and not having to do anything once you do it. That's what your expected average annual returns expected on a quarterly basis. So when you're getting, sitting at home and all of a sudden you're going to get an email from InvestNext that says, your next quarterly payment is coming due, and here's the amount of money that's going to get deposited into your account. And then you get to look at the email and smile and then go back to doing your rest of your life, because that's all going to happen automatically for you.
In the case of this group, they just keep trading. They just keep trading and making more money.
There you go. Well, that's always nice too. So, just more highlight, and this is all stuff that I've kind of mentioned already. So just really quickly, it's 64 units, $4 million purchase price, $2.9 million for the mortgage. Let's see, operating reserves, $64,000, and the market cap rate, which is just the purchase. And if you guys are all real estate people, you understand what cap rates are. So we're going into this deal with a purchase cap rate of 6.5%. The capital repair plan. So as I've mentioned before, we are looking to do 45 units with the heavy lift, which is the full renovation package. We've got 19 that'll be a lighter one. Those are the ones where residents leave and they actually leave them in really good condition. So we're just going to kind of keep those. We'll do lighter lifts on those. We are going to be putting in a dog park in the area. That it's a dog-friendly property already. And what better way to put in an investment or an additive that brings value to the apartment than having a place for people to let their dogs go and play in an area, do their business, and not be, out right at the sidewalk. There's nothing worse, I think, when you walking out of your apartment and you step in somebody else's doggy doo-doo. So this is going to alleviate that. So the dogs can go out and play in the dog park and get their exercise and not be, intrusive to the rest of the property. There, as you saw in some of the earlier pictures, the second floor units do have a deck. Some of the decks have already been replaced by the current owner. So we're looking at doing replacing and either refurbishing the ones that are in generally good condition, or the ones that are maybe a little more rundown. We'll be replacing those decks. This is all part of our CapEx plan. So it is in the numbers that I'm already giving you. That stuff is already included in that. The swimming pool that I pointed out is currently not working. That's because our understanding from the owner is that there's a leak in a pipe underneath the swimming pool. Now, we've already talked to an engineer who believes we should be able to fix it. So that is our goal, is to fix the pool, because we think that's a great value add and our residents will enjoy having a swimming pool in the summer months. Now, if it turns out for some reason that the pipe can't be fixed, then we do have a plan that is also in our CapEx to fill in the pool, cover over it, and then we'll use it for something else, whether it's the dog park or something else that we're able to put in its place. But ideally, our goal is to be able to fix the pool and have it up and running next summer. We'll be replacing HVAC units as needed. Some have already been done on the property, so that really we're not expecting to have to certainly do all of them. But during the course of a 5-year ownership, we do expect that there are going to be some HVAC units that need to be replaced. We've got, as I mentioned in the beginning, there's the office, and the office is a really large office. So it's got an area that we can turn into a community center, which is what a business center, community center. That's what we're planning to do. And that also is part of the business plan and the money that's allocated for it. So that way, instead of it just kind of being unused space right now, we might turn it in, a small section of it into a small gym too. It's got, I think it's about 1,600 square feet. That's a pretty good size. So there's quite a bit that we can do and bring value in for the residents in that space. Capital improvement projections for 1 year, $432,000 will be spent in renovating 36 of the 45 units needed. And then the balance of those will be done in the second year. Other capital repairs will come out of the annual repair budget. Investment details. So if some of this, I'm sorry if I'm sounding repetitive, because I do know some of this we've gone over before. So just quickly, again, I want to just mention the raise is $2.2 million. We've got $814,000 of that is going toward these capital repairs that we're talking about. So it's a fairly large budget. So I don't anticipate that we won't be able to do all of the things that we're talking about with the amount of money we're raising for this. The purchase price is $4 million. The loan is 2.9. The thing that's really important for you guys is the split of this deal is 70-30%. So our investors, the people who bring money into this deal, will get the lion's share of the ownership at 70% of the ownership. And that it will, and your percentage of that 70% will be based on how much you bring in. If you bring in $100,000, it's one amount. If you're very generous and we love you and you bring in $500,000, well, then that's a different amount as well. Let's see. And then those of us that will be managing the property, we get 30% of the deal. There is a 2% acquisition fee that we have carved out, and that's for all of the work that's gone into getting this deal to you guys to be able to invest in. So there's a lot of work that John and I have put in, and Hector and Lewis and Shanika are also doing work to get this to close. So that will be split out between the GP. So as I mentioned before, this is a fixed interest rate Fannie Mae loan. So you're never going to have to hear, for those of you maybe invested in other deals and have heard, oh, the interest rate went so high and now we don't have any money to give to our investors because our expenses went up. You're not going to have that on this deal. The rate that we're getting and the mortgage payment that we pay is going to be exactly the same for the life of the loan, because it is a fixed rate loan. Cash on cash projections, as I mentioned, is 7.21%. And we, the owners, are going to be investing a minimum of $125,000. We're looking to make that higher, but we believe in this deal too. So we absolutely want to be investors as well as GP owners. Let's see. I'm trying to think where we go. The plan is to sell the property after 5 years. And as mentioned previously, you're looking at returns of 99.5%. So basically doubling your income in 5 years. Now, the one thing about the fixed interest rate loan is if the economy goes down, God forbid, like it did say in 2010, we don't have to sell in 5 years. If it's not an optimal time to be selling, because it's a fixed interest rate loan, we can hold on to the property longer. And that allows you guys to continue getting the cash flow that you're getting. And then we'll sell when it's a more optimal time to be able to sell so that you get the returns that we're looking at. And then generally the investment is $50,000 to $100,000 minimum investment. So I don't know if anybody has any questions now, or if not, I'm happy Hector gave you my information and he can also answer any questions offline as well.
Yes,
thank you for that, Rhea. We do have a couple questions from Justin. But before we get there, one thing to add on that or clarify, like she was saying, it is a 5-year business plan, but what Rhea did in a very smart way was secure a 10-year loan, just in case. It's fixed for those 10 years, so there won't be a need or a pressing need to exit. As we've told you before, in real estate, sometimes it's about waiting, right? Louis and I have said this many times. And, if you absolutely are put up against the wall with a deadline or a timeline, you might not have the optimal selling moment, depending on the economy. Nobody has a crystal ball out there. I ordered 3 already from Amazon, but they keep not showing up. I'll let you know as soon as one comes in. But just in case it does happen, she has the ability, we have the ability to stay in this deal a little bit longer and just cash flow, right? Get that mailbox money or that ACH money, like Louis said, and let what's going to be in the economy until it's a better time to exit.
Exactly.
And so Justin, let's say, quick question. Let's say in 5 years is not the optimal time. What's the plan? Hold for another year and see, or is just whenever we get an offer or something, then we jump on it, or what will be the procedure at that moment?
Well, generally speaking, the goal is, like I said, to hold it 5 years. If it comes up and it's not optimal, chances are unless somebody comes in with some amazing offer, well, first of all, we would vet that because, if it's not the optimal time to sell, you would want to be concerned about somebody coming in with some windfall offer that you're not expecting. But if it did happen and it was a great offer, then we certainly would take it because that's a good thing. And then all of our investors would get their money back and people could then turn around and either invest in another deal or go take a long vacation somewhere because that's going to be some good returns on your investment. But if that doesn't happen, we'll basically watch it from year to year. The deal that I've got in Kentucky right now, that's kind of the mode we're in right now. We were expecting to sell it in 5 years. We've only owned it 4. So right now we're looking at, our plan was originally we would be selling it by next year. I'm not thinking that next year is going to be an optimal time, but on that, we also have a fixed interest rate loan. So we're going to be able to hold on to it until it's a better time to sell.
Perfect.
It's just is the waiting game, right? And collecting and getting paid to wait.
Yeah,
which is
the question is how often do you guys, okay, let's see how the market is. Let's see how the market is. So if year to year is perfect. Yeah, because otherwise multifamilies, I know they don't move fast. So that was the answer. We got another question here from Justin. Does the 30% rental rate takes effect at the renter's next renewal? And how far out can that be? So how quick are you planning to move the existing tenants out of the units to the rehab and rent at the next price?
So our goal is immediately to come in, and I think they have 1 vacant unit, which may or may not still be there by the time we close on this deal. But our goal is really to start with just the vacant units that exist, turn them. And like I said, we've had a number of tenants who already said, hey, you get more of these upgraded units, we'll absolutely move in. So then our goal is to move them into the new units at the higher rent with a new lease. Then we can go into their units and then upgrade those units. So ultimately, our goal is not to have like an increase in our vacancy whatsoever. We just plan to do it over the course of, like I said, a year and a half to 2 years total to be able to get all of the units turned. But ideally, if we can get it done, in a year, that would be great. And I think that we have a good ability to do that because of how many of the residents have expressed interest in going into a remodeled unit. So.
Got you. Are the units that you know of, most of them are month by month, or they're all in a yearly lease?
I believe right now that it's a mix. I want to say that like half to 2/3 of them do have a current lease, and then the others are on a month-to-month basis.
Perfect.
But even if somebody's on a fixed lease right now, if they want to move in, we can sign them a new lease in a new unit at the higher rent, and we can just move them out from their current lease. So.
Yeah, because at that point you're adding value to their life. They want to you're helping them out. They want the nicer units. Like, all right, we'll help you move from unit 3 to unit 4, and we'll just start you on a brand new lease in unit 4 with already an upgraded floor plan.
Correct.
And if I remember correctly from John's prior comments, Rhea, there's already been a couple of recent rentals or a couple of recent units that have rented very close to that target rent that you guys have. And so that's happening today. The target rent is you're expected on the numbers. You're not expecting to hit that number for another year and a half, 2 years. So, and it's happening today already almost.
Yeah, the one that they've already turned got the $185 without even like blinking, and now even some of the other units that they haven't renovated, because of that, they're actually getting a little more rent than just your traditional, say, 3% increase. I think they're getting around 6%, 7% because of what's going on at the property as a whole, the work that's being done, and so the residents know that there's value add is being brought to this place.
Yeah, and you're not counting on market appreciation. You're simply forcing that appreciation in there by doing these upgrades and making these units nicer, and just what's happening already within the property and within the market.
Right.
Yeah, making the whole thing desirable. Basically, being desirable, you increase the prices all over.
Justin asked another question.
What? I didn't see it.
Why are there so many pictures and real estate pictures with toilet seats up instead of down?
Because it's a guy, Justin. Let's face facts. Come on. Women don't ever leave the seat up. Just kidding.
Oh man, I had to throw that question out there. It was just too funny. Team, if you guys have any other questions, please feel free to pop them in the chat. If not, reach out to me. I believe we also had Rhea's contact on the slideshow. Lou, if you want to pop that back in, you guys feel free to reach out to Rhea for guidance, for coaching, for other investment opportunities. If this one is not up your alley, if you're not accredited and you're looking for other stuff, like I said, my goal always here is to bring people to you guys that can help you in your wealth journey. It's not just Louis and I that are out there investing. There's a whole slew of investors out there that you guys could partner with. I don't bring a whole lot of people in here that I don't trust, and that's by design, right? And so clearly I'm willing to attach my name next to Rhea because I've liked the stuff that she's been doing over the last couple of years that I've known her. Rhea, thank you so much for being out here. We appreciate you coming on the show.
Thank you for having me. Appreciate it.
It's definitely been a good learning experience to work with you on this deal, and I'm sure the audience learned a thing or two more on syndications, because we're always talking the theoretical, right? This is what a syndication looks like, but we haven't actually had someone, present a real live syndication, because it takes a 506 deal and then someone that I like for that to work, right? And a deal that I like says like it's a whole lot of stuff. It's like, yeah. So at least now we've seen what a real life deal looks like, and this is the presentation that you would get from anyone out there looking for you to invest with them team. So it might not be as well organized or as upfront, so just always watch out for that. Your job in passive investing is to vet the team and the operator that you are investing with, and then make sure that the business plan makes common sense, and sit back and collect while you trade or sleep.
Make sure
Or walk
the numbers make sense. Exactly.
Yeah.
Just make sure numbers make sense. Make sure the business plan makes sense. Make sure that they're not trying to, increase everything 100% in a year. Or, things are normal, basically. So things that they can happen, and you see the pictures, and you see the renovations, and you see the new rents. And if anything, you just, pick up the phone, ask a question. Hey, Rhea, what about this? What about that? That's the whole mission. That's what the partner, the GP, that's what they're there for, to answer any questions that you might have, so you feel comfortable putting some money in. Simple as that.
Absolutely.
Okay? I love it. Well said, bro.
Woo. Yeah, there you go. That was a Friday for you. All right. So, do we have any questions in the group? Any other investment opportunities? They're gonna look very similar, like Hector said. So if you have any questions right now, of everything that you see, anything that you might know, some number or word that doesn't make sense, shoot it out. If not, then let's close it. Man, they all know everything. All right. So
it's Friday.
We got questions. We got all your answers. Again, QR codes. My bro here, if you go to a QR code, he's gonna get a telegram somewhere. I don't know. I'll get an email. Yeah, I'll get an email, or you're gonna get a memo request from him. If anything, questions or comments, please, we're here, real estate at reallifetrading.com, reallifetrading.com/RE. QR codes are there. If you're in YouTube, like and subscribe. Everybody says so, but it's true. If you like and subscribe, the thing's gonna keep, we're gonna keep popping up on your screen. So if you like us, that's what you need to do. All right. So with this,
it makes me feel really good. I do look at those likes and those comments, and it's just it's a huge ego boost.
And I got a couple people that's like, dude, you're second after my kids' bedtime movies. Like, what?
I love it.
So it's great. All right, with this one, let's close it. Happy Friday, and thank you for being here.
Thanks, everybody. Love y'all. Happy Friday.